Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look back on June and July's sales from a report from Headset and BDSA Analytics. Starting with Headset's report on sales from California, Colorado, Nevada, and Washington, all seeing an uptick in sales. California seeing a nice trend, up 2.5% from the previous month at $327 million in total sales. And in Colorado, $138 million in total sales. That's an uptick of 22%, which they desperately needed. Nevada, they actually had a bounce too, $49.8 million. That's a 14% uptick, reversing some of the downtrends that we've seen. So that's a good sign. If you remove April from every single one of these, being April 20th, and you can get a better idea since April kind of skews the data. Nevada is seeing a nice rebound. So that's going to help them tremendously. Washington was a little bit flat at the beginning. You can see the beginning of the year until after cannabis businesses were deemed essential, and then you see that uptick. But between California and Washington, looks like the best markets. Washington only had 121 million, an uptick of 1.68%. Still relatively flat, but one of the best performing markets because it didn't really dip at all. We didn't see a huge amount of 420 sales. In fact, this month, just this last month was higher than April, but nevertheless, it still looks good in a pandemic in Washington. So when comparing Headset's reports to BDS Analytics, we can see Nevada sales improving, like we mentioned, after retail reopens in May. So this is a report from this spring, looking at May over April, and then looking at last year, 2019. So again, Maryland had some really good medical sales. Looks like May's growth was 97% higher. So they're doubling their sales from last year, and they're up 13% from last month. Oregon was up 58% year over year and 15% over last month. Nevada, they're down 6% from last year. So that's still been hurting them tremendously, but they are up over 50% from last month. So they're starting to rebound, but terrible sales because nobody is out there in Vegas gambling or hanging out, going to events, none of that. And in fact, the CES, the Consumer Electronics Show, was canceled in January 2021. It's 250,000 people in Vegas. It's going to dramatically impact a lot of businesses. Colorado looks flat at 28% month over month, 32% over the year. California's flat at 15% month and year over year. Arizona, they're doing pretty well. They're up 58% from last month, but only 7% from Arizona's doing well. They're a medical state. They're up 58% from last year, but only 7% from last month. You can see from this weekly sales pattern returning to normal, there's a lot of volatility. If this was a stock market, I'd say this is a huge volatile market. But what it looks like for cannabis purchasing decisions is that people are buying in bulk, waiting, and then going back. That's what this looks like to me. There's a relatively flat trend line when you move this out. But we're still seeing fairly normal sales where a third of all sales happen between 3 and 5 on a Friday. And so we're seeing that in May at 36%, the first Friday of June at 40%, and then the last Friday of June at 35%. And that percentage is representing the comparison to year-to-date average daily sales. Zooming in on Colorado, very similar patterns. California is also having consistent patterns, a little bit wider on when people are going back. So I think people in California are maybe spending more, approximately $120 according to Happy Cabbage. It's a lot more than the $60 minimum delivery. So there is a stock up behavior that is starting to fade as shoppers are increasing, as stores are seeing more shoppers enter the stores. So it looks like maybe back in April, around April 20th, we saw a huge spike where the average price was approximately $120, and that's dipping down to about $90 now. So it's still really high sales per basket size, but again, it's kind of dipping down because people aren't hoarding as much. California has a similar trend. It's not as much about the first of Friday of the month or last Friday of the month. So that's telling me people aren't necessarily waiting for payday. They're just kind of going out and buying it when they need it, when they want it. All right, this graph is about delivery, although it kind of looks like one of those pictures where there might be a boat hidden in it. It's kind of making my eyes cross a little bit. So we're going to run through this quickly and just say that delivery is going to maintain its share as things normalize. And in fact, I think what we're going to see is a lot more states like Washington fast tracking delivery. And that's going to impact a lot more. So people that don't want to go to a store are going to buy more when delivery is available. So I think once delivery is made mandatory or at least fast tracked due to COVID to reduce people going into stores, I think we're going to see a lot more purchasing and people trying things, just similar to how we saw edibles increasing as people stayed home. I think you're going to see more and more companies decide to prolong going back into the workplace. Like Google, they're going to stay home for another year at least. So if that does happen, we'll see a lot more people out there trying new things. And with delivery, I think that's going to increase the amount that they're going to pay per visit or, per purchase, with a lot more trials of new products. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.